Hello, everyone. Welcome to the live stream. I'm James, if you're not familiar with that. We're just waiting for Paul to come in and just doing a sound check, making sure everyone's able to hear and that we're all on the same page. So welcome to the stream. It's Wednesday, so middle of the first week of the sort of beginning of the year, the new year. And it's going to be interesting to see how next week sort of starts off, as we get going. So I think Paul's just about to arrive, and we'll talk more about that as we get in. I was just saying, Paul, I was just saying we started a little bit early just to get everyone in here and make sure that the algos catch up.
All right, let me get the stream started for the group then. Give me a second.
Yeah, no worries. Perhaps that messes up the timing of it too. I do apologize of the synchronization between the two streams.
Yeah, no, I think we're all right. See if we can get it going. Let me just check on my phone. See if it's running. Just give us a second. Right, double check.
So welcome, the boy Jones. First and patient, waiting for alpha. You got any alpha, Paul? Boy Jones wants some alpha.
No, I don't have any alpha. Alpha, excuse me. Let's check that's all working. Need a minute.
Yeah, no worries. So
yeah, that's all good.
It's been a quiet start to the week, actually, apart from Bitcoin getting a bit of a surge and natural gas collapsing and gold and silver moving around a little bit. Not much going elsewhere though. So quite a quiet start, low volumes. So it'll be super interesting to see how we finish off this week, Paul. And I see Bitcoin's coming down as we're talking. And of course, we've got the NFP and various other jobs numbers during the rest of this week, starting tomorrow or today, I think, actually. We might actually get the JOLTS job numbers. I think we may have had them already. And then we've got the non-farm payrolls coming up on Friday. So all the key numbers that the Fed's going to be looking at. So we'll talk a little bit about that too.
Yes. Sorry, yes. I'm just getting ready. I'm just sorry. I'm just giving
no problem. I launched this thing a little early, but that's okay.
Right. Yeah.
Does help the algos get set up. Yeah.
So obviously, lots of stuff is going on now. Yeah. I mean, Bitcoin. We can just briefly touch base with that. I just think it's important to. Firstly, we've got the January bump, right? And you, James, as someone who's been trading for a while, will know that, of course, especially on the back of a very stagnant December for multiple reasons, there's going to be some movement in January. And I think the important thing is to just bear that in mind, that the context of what we're dealing with is, right, it's the second move which comes after New Year's, which is going to be telling about market direction, right? So are we going to get follow through on this move from Bitcoin as a result, as an example, right? So with Bitcoin, this is just the Bitcoin weekly chart. And I think this is the splash of cold water people potentially need. So I'm doing my hand again. I'm putting my hand again. Please point it out. So this is a chart which I was discussing in Bitcoin Update this week. If you haven't checked it out, it was out yesterday. It covers quite a lot of this. So the idea is we've broken above 89.90K now, which you can just see if you zoom in on this chart. This is obviously the weekly chart. So we're trying to flip this trading range which we've been in. You can see we've just eked ahead above it now. So if you look to take a position, and there's a good opportunity to take a position on the flip side of 89K, why are you entering a long trade? Now, the idea for a long trade is, are you entering it for a new all-time highs to come up to 200K? Is that your play or what? And this is the issue. We have to look at this 50 MA as the next significant line in the sand. So if you're entering a Bitcoin position now, which is in a pretty good position, technically speaking, you want to be looking to take profits around 101K, right? Or at least approaching, 106K, this area, because we've lost the 50 MA on the weekly. And therefore, the possibility of breaking back above it, like we did at the start of the bull run, with any consistency, it's difficult. The probabilities aren't in our favor. And there's multiple patterns in play as well, with this potential head and shoulders pattern also having the right shoulder completed at this area. So even though, of course, you can obviously see a break of the 50 MA and think, okay, so maybe we're not coming down, maybe there's not a bearish scenario, maybe the bull run's going to continue, that's fine. But until you see that, you have to be planning to enter around 89k on the retest if we get that, and then taking profits around this area. Now, a lot of people will say to me, James, they'll say, well, but what if it goes higher? Well, the issue is there is no issue, because ultimately you take profits, maybe 50% of your profits, right? Or all of them, right? And then if you see a break above instead of a retrace like this, and you see a solid break, then guess what? You can re-enter, right? You can re-enter once you've had bullish confirmation and then ride it up. But we should be making sure that any Bitcoin play we've got now is not like, oh my God, it's January, we're going to the moon, it's going to be a bull run 2026.
Yeah.
We're coming in now, we're looking to take profits and then just taking it step by step. And I think that's the most important thing. I mean, any thoughts on that from your perspective?
I think, absolutely. Paul, I think that's a really important point. And it's probably the thing that leads traders into trouble the most often, is that it's a fear of missing out, FOMO, basically. It's actually the literal definition of FOMO. So when these markets move dramatically up, you think and it does happen sometimes, let's be honest. I mean, Bitcoin and some of the altcoins can do this, and it's called a lockout. So you're waiting for the retrace, you don't get it, and you get locked out. But it's normally just temporary, and eventually things come back down to test the breakout levels naturally. But the idea that you are going to miss out if you don't get in, or if it breaks out and you're not with it, you've lost out, is generally not true. Most of the time, sometimes it is, but most of the time it isn't. And as you said, you can get back in on the retrace. And I have to say, I suffer from exactly this problem myself the most, more than anything else. So I'm glad you raised it, because it's something that I really struggle with. I think most traders probably do. It's not really losing trades, although that getting out of losing trades, taking a stop loss is difficult, but actually waiting for the right time to get into a good trade is much more difficult. And I think you touched on a key point there.
And I think it's just basic. I mean, with volatile assets, you really got to lean on the planning. And when I'm entering a trade, I'm entering a trade knowing exactly what I'm going to do if it goes bad, knowing exactly where I'm going to take profits. And it rarely does that plan change. Part of my plan will be, well, if I see this, then I'll move up my TP to TP3 as opposed to TP2. But ultimately, you need to enter with the plan, because once the market starts moving, you get carried away with the excitement, and then you start thinking, because or I'll move a stop loss up, or I'll get rid of my TP, and then what I mean, and then maybe you see it go up an extra 5%, but then if you haven't following your plan, you lose all of the gains potentially that you've put in. So it's just an important point, I think, probably to make. I mean, shall we talk about...
So this is before we flip over, whilst we're on this page, and I don't want to talk a lot about Bitcoin today, because I'll leave that to you. And I've got a couple of other things to talk about, but this is the kind of thing that I expect. And of course, a retrace to the channel bottom, which is a potential bear flag channel, by the way. Don't get too excited about the channel bottom itself. This is a bear flag as it stands. We've got to get to the top before it's properly a bear flag. And maybe we've already, created the flag already. But, I think we could get back down there, and that will scare quite a lot of traders out. This is the day chart. And we had a very classic inverse hammer candle yesterday, leading to the downfall today. Look at what happened at almost the same price over here. Just put my cursor onto it there. Hanging man candle followed by the decline, a pause for one day, that's tomorrow, and then a continuation of the decline. Almost identical to what we've got here. And so I expect we'll move down, but how far, I don't know. I'm hoping that we'll bounce from here, the 50 and the 20 period moving averages in this zone. And of course, the flat top of this sort of breakout zone. But if we fail here and break down and close beneath all of this stuff, I'll have to hedge my entire position. And that's the way it is. So it's not someone posted up in the private group. So it's all in now, Paul, is it, on Bitcoin?
Oh, yeah.
And you said, no, absolutely not. So no, we're not all in. In fact, definitely not all in. I haven't even got a full size position on any of the coins that I'm trading. So yeah, if we get something like this, but if it carries on moving down after that, and we don't get a squiggle out of there up to my blob's normally quite accurate. So I'm expecting to get there at some point. But I don't know if it's, it's an expectation, not a prediction. So there we go. That's what my only thought on Bitcoin for now. And I think the altcoins will obviously follow suit. And so I'll leave that to you to talk about more, Paul. as you
Yeah.
wish.
I mean, we'll get into,
Yeah.
obviously, I've got my crypto live stream tomorrow, so we can jump into that a bit more. I mean, so I think, look, do you want to talk about the Venezuela situation? Because I know there's a lot of questions.
Yeah.
You got anything to say
Yeah.
to start with?
Yeah. Not really. I'd like to hear a little bit from you. I haven't followed the broad story and how that might affect the energy markets and the global asset markets overall. But we all know what happened. We don't know. It'd be interesting to hear what your thoughts are on liquidity, global liquidity, if anything, and energy markets in general, and trade in Venezuela, and politics maybe as well. If you can give us a little gen on that, being
Yeah.
close to
So
the situation yourself.
yeah, I'll try and frame it in terms of the issues with potentially impacting oil prices and all that kind of stuff. But as someone, as there's a select few people in the world which have spent time in the country, especially from the West, and I think it's very important that we speak about certain things as well. And what I do want to say to start with is very clearly that Venezuelan minerals and oils belongs to the Venezuelan people. It doesn't belong to the current government. It doesn't belong to autocrats or dictators or any other leader or administration from any other country. That's the most important thing. The Venezuelans are living in poverty. Their middle class was smashed down into poverty 10 years ago, and they haven't recovered. And it is an appalling situation. Now, Nicolas Maduro, and obviously Chavez before him, are terrible people. And it is wonderful to see him doing the perp walk. But I don't agree with this sort of intervention either, because ultimately the government is still intact. And this isn't like the Syria Assad regime, where it's a family dynasty running it. It's essentially where you can just remove them and then put someone else in, and you can maybe have some change, which may be happening in Syria. But the government, every aspect of the government, all the way through the judiciary, is corrupt. And until they are gone, there will be no meaningful benefit to the Venezuelan people, regardless of whether oil is extracted or production increases. And that needs to be said. And there's just not enough people talking about that. But that being said, because they are wonderful people, they are ultimately the bravest, most heroic people and undersung heroes of the world, especially of South America. And people need to speak up about it, because I intend to settle in Caracas in the future. So I buy a property there. So I have investments in it. Now, in terms of that being said, in terms of the oil, so just to run to what was announced today, there was the recent, there was a significant political thing where essentially the Donald Trump, I think, said that there was going to be a certain amount of 30 to 50 million barrels of Venezuelan crude oil, which had been sanctioned, is going to be handed over. Now, just the first thing to recognize about that, that's not, the US consumes roughly about 20 million barrels per day. So it's only a couple of days worth of supply. And the Biden administration released so much more than that, and it barely scratched the surface of prices at the pump, let alone the global market. So any news about that requires just that splash of cold water, because it's just really not going to impact anything. All right. So that's the first thing. In terms of and this is a bit of a deep dive, and James, feel free to jump in, but as many of you will know, and James, you'll know this, of course, that Venezuelan oil is dirty, not politically, but because of physics and infrastructure. So what does that mean? It's heavy. I think the term is heavy sour crude, right? And this is thick,
Correct. Yeah.
carbon intensive oil, not dissimilar to Canada's. Now, I'm not an oil expert, with high sulfur content, so in order to extract it, it is a very intensive, because it doesn't flow naturally. It comes out as almost solid at typical temperature, right? So it must be heated.
Sludge.
Yeah, exactly. It needs to be heated and generated by burning natural gas, making the extraction extremely energy inefficient, right? And of course, this leads to more specialist equipment required, as well as massive pollution per barrel compared to most other production. And this includes methane leakage and all that kind of stuff. So it's a major climate issue as well. Now, so it's very high emissions per barrel. Now, output has fallen in Venezuela from around 2 million barrels in 2016 to about 1 million today. And this has, of course, been driven by sanctions under investment, long-term mismanagement, and so it's always been in decline. Now, in order to get reviving production back up and running, it's estimated by some experts that current output would require over 50 billion worth of investment over 10, 15 years to bring it back to historic highs of above 3 million barrels per day. Just to maintain current levels, and then to return it to historic highs, where we're not just producing 1 million barrels, it's going to be 3 million barrels per day. That would cost roughly around 180 to 200 billion of investment from the United States and companies associated, which is an expensive bet in a world where, you know, we have abundance of oil and demand is slowing. So the idea behind this, that this is a extremely helpful move for the oil industry, regardless of what you think of it, right? The reality is it is going to be extremely inefficient, extremely costly, extremely difficult, which means it's going to take a massive amount of time. I've seen the infrastructure firsthand in some areas of the country, and it is a complete disaster. It will require a decade to rebuild, even with modern technology from the most expensive, most powerful companies, right? This is the context, right? So it is unfortunately a story of tragedy, right, and hope for the Venezuelan people. But in terms of the context of minerals, oils, all this kind of stuff, it's not going to have any impact on the markets going forward in any way, shape, or form. Because even once oil production gets going, demand is going to continue, no doubt, to drop in the future potentially, and it's just going to fill voids in potentially some producers backing off. So that's my perspective on it, and it's obviously something to be paying attention to. But ultimately, you know, we do want that production to be up. We do want that money flowing. It'll be very helpful for the Venezuelan people and the market in general to have extra, you know, supply and all that kind of stuff. But the reality is that what needs to happen is doesn't need to be just one mustachioed guy handcuffed in New York. It needs to be all of the administration. And then with American help, potentially, the country can be rebuilt. So we have that supply, and that's fine. But it's a very complicated situation. And I think it's very important to recognize that we don't list, this is what we can get from this country, because ultimately it's not ours to take. And if we want any prosperity in the region, which is maybe an argument, the Venezuelan people need to be prospering first. Because I can tell you something, James, that if everybody should visit Venezuela when they can. It is one of the most beautiful, stunning countries in the world. And if they can get themselves sorted with oil and minerals and all this kind of stuff and diversify things like into tourism, it's going to be a wonderful place. And it will also help having that kind of level of supply in the market with special minerals and all that kind of stuff, which is helping US interests compared to all of the stuff from the East. But it's a very complicated thing, and there's not going to be any immediate impact. So, I mean, that's just my take with a little bit of an insight. A Venezuelan would do it better than me.
Good. Excellent. Well, I think I agree with all of that. Look, it's certainly not bullish for the price of crude oil, is it, Paul? I mean, it's not. If anything, it's going to be bearish. If there's any inkling or thought, as you said, that I think it's up to $80 million that they're going to steal right now. Or I think the idea is that they're going to refine it in Florida or somewhere around, or Alabama, and then help, you know, I don't know what the deal is, but it's only about, as you said, 3 days of US consumption. So it's, it's a drop in the barrel, in the oil barrel. But I think the overall sort of idea that there might be more oil flowing in the future is, you know, can't be really bullish for oil. And I'm already an oil bear and have been for about 3 years now. So I think we'll continue to see oil prices leak down, but less and less rapidly as we get into these very low levels, quite critical levels now. A lot of countries can't compete at $50 a barrel, 48, 45. And that's part of the ploy of OPEC, is to actually drive the price down to drive out competition. So yeah, I think it's just going to carry on dribbling down. I'm short from those 2 red arrows, and we basically topped up that position this morning. I'd taken profit on it. We just put it back on, and I'm hoping that we can get down to 55, and then probably down to 50, and probably just below 50 as the market's likely to overrun through that double bottom there, down to 50, the big round. And where my arrow goes and there's a support level down at 50 as well. I think we could probably just pip right through there, grab a little bit of, fake the low out there, and then bounce out quite rapidly. And then we'll probably end up back at more or less where we are in the mid 60s or 70s, low 70s by mid-year next year. And I think that's the way oil is going to be. It's not going to be the most exciting thing to trade going forward. And there will be international crises occasionally, like we saw that drove this oil price up over here with the Ukraine war and all sorts of different conflicts going on and in the Gulf region. But, apart from that, oil just sort of goes down generally. It's not a very exciting instrument, and it's getting messier and messier as we get cheaper and cheaper. So a lot of folks were asking about oil, Venezuela. I'm glad you sort of filled us in a bit there, Paul, because there's quite a lot of misinformation going around and a lot of clickbait going around about 80 million barrels, dumped onto the market. Oil price is going to crash, or there won't be any oil for Venezuela at all going forward. So the oil price is going to rally, because of
it's
supply problems. It's ridiculous. Yeah.
When politicians are obviously, and all politicians of every side of the aisle, they will always use these figures, which are difficult for everyday people to quantify. It's the same with like Bitcoin and price action. It's like say, some whale just bought 200 million. I'm like, right, but it's over $1 trillion market cap. Like, what's that going to do? Like, what are we talking about here? So everyone's like, I'm going to buy Bitcoin because 10 million's been bought. I'm like, that happens like every hour. Like, what are we talking about? Like,
yeah, exactly. So just to finish up on oil, and with that context in place, we have a triple bottom, double bottom over there to the left in April, May last year, and then another touch of the same level last month. Was it last month? Yeah, just about, last month. And so, and that has not resulted in a new rally. So obviously we're going to go back down there, probably break down through there this time. And it's forming a very large descending triangle, actually, with the bottom now down at 55 and the top sloping down. I'm not going to draw it in, but you can imagine it. And if we do break down, and of course, if we do break down through a descending triangle, we'd expect this to move quite a lot lower. So that's not out of the, off the table. We could move down to $30. I think that's unlikely, but if we have an economic collapse and various conditions work out in the favor of a big move down in oil, it could happen. So, and we've seen oil down at $10 just a few years ago. So don't expect that we're going to just automatically find support here, because it's not a foregone conclusion. And I actually do think, Paul, that any news out of the Venezuelan oil industry can only be negative for the price of oil, unless something really weird comes out of there, like they shut off everything and there is no oil at all, which is unlikely too, although it's possible, I suppose. Who knows? But for now, I'm remaining short.
In the grand scale of things, that's kind of where we are at the moment. I mean, production is like, you've got to compare to like the amount of oil and their peak production. It's like, it's just been the case is declined for a decade now. So it is just like the tap's dripping ultimately. So
yeah, for sure. And while we're on energies, so the things I'm still on. I'm in a hotel, as you can see, for my 60th birthday yesterday. You can send your presents later.
Again,
thank you very much.
Wonderful milestone. You don't look 60, mate. I'm going to be honest with you.
Thank you very much. I appreciate that, Paul. And I also got to see my grandchildren, one of them for the first time from the UK. So I had a wonderful day yesterday, and I'm feeling a little bit emotional about the whole thing. I'm getting old, and the youngsters are coming up, and the cycle of life is moving around as it should. I'm still standing, luckily, and I'm pleased about that. It's nice to see the grandkids coming along, and I felt all warm and fuzzy. I'm still feeling a bit that way today. So there you go. So I'm, I suppose, a little distracted from the markets overall. But let's look at natural gas. Not distracted in my trading, of course, because just distracted my delivery, maybe. But natural gas. Now, I've had to, once again, here's the big picture, right? We've moved down. This is the 4-hour chart. Everyone was hoping that last move up in the last contract, there's the contract between the two roll gaps. There's a roll gap there. That was the last contract. We went up. We came all the way back down to where we started. We rolled over into the new contract and went even lower into this current contract, which starts at that red roll gap. And we've also got a weekend gap, which occurred just a couple of days ago, from the 365-ish level. We gap down to about 340, big gap down, and we've sort of tried to hold that low. We actually broke down through that low. Eventually, I had to hedge. I'm not one to hold natural gas positions if they move against me, because it can move suddenly 10% or 15% against me, and I'm not going to be holding onto those bags ever. And so I've hedged my position, which means, and of course, the moment I hedged, it bounced out of there, and I've now got a hedge position with a locked-in loss, and I have to decide what to do next. This is the 4-hour chart. We've broken up above the 20-period moving average, but we're still below. We haven't filled the weekend rollover gap, and we're still below that ledge at the very key 355, 56 level. Let's go to the day chart, and I'll tell you what I'm thinking of doing next, but I'm not totally sure. We're pretty oversold on the day chart. That entire contract was wiped out, and we've moved lower since. We're below all of the key levels that I consider to be important support levels on this chart. First of all, 375, which is the long-term, I suppose, midpoint of natural gas's trading range, point of control, if you will, over years and months rather than days and weeks. We've also got the 355 or 350 level just below where the black line is, which is a half round, but it's also a triple top. And it's the area that we broke out from into that contract, which flopped at, the last contract, which flopped back down. And so we're below that as well. It doesn't look good for the longs. Now, a lot of folks will be looking at this saying, well, we got hedged, it's bounced out of here. Let's have a look at it more closely again. We have to fill the weekend gap, not necessarily because we're below the ledge. We might not fill it. And generally, it just looks weak. And this is not a bull run. And as I've learned a good trick from you, Paul, or a good way to describe it, is it's a bullish, how would you describe it? A bullish retest or a bearish retest rather, right? Yeah. A bearish retest. So we're in a bear market. We're below key supports. We're running up, but it's a bearish retest of key support levels that we've broken down through. I'm not willing to unhedge this trade right now. And as we're approaching the end of the day, and we've got all the jobs reports coming out, starting, I think we got one today. I haven't had a look yet. I think it was JOLTS today. Got another one tomorrow, and then NFP on Friday, which will affect liquidity overall.
Services PMI as well, and then US trade balance and US employment claims tomorrow. Yeah, that's right.
Yeah. And so, and we know that the Fed has switched its focus somewhat away from being concerned about high inflation to being concerned about high unemployment. And if we see these numbers a little bit weird over the next 3 days, including today, tomorrow, and the next day, ultimately on Friday with the non-farm payrolls, and if we see that the Fed is likely to not cut, or we might see some different things coming out of the jobs numbers and the sort of deeper dive into those numbers, it will affect all assets, including natural gas. So do we want to take trades ahead of Friday, unhedge? I'm not too sure. I'll be watching this very closely. But if you are looking at the long side, all I would say is be very, very careful that we're not sort of bumping up underneath very, very important support that we've broken down below, particularly the 375 level over here. 2 order blocks, big key level, broke down through it cleanly without a pause, broke down on the weekend through the next level without looking back. We haven't even got back up there yet. So be very careful of the long side, and notice that all we've done over the last number of contracts, or 2 contracts, is gap down, gap down, gap down. Yes, we've got a lot of gaps above us that probably need to be filled, particularly these 2 weekend gaps, but that could be weeks or even months into the future. Natural gas is a ranged product. Don't treat it like a stock market or Bitcoin or something like that. We range between roughly $5 and $2, and we trade that range day in and day out, year in and year out, decade in and decade out. And so, when we're still above sort of 350-ish in that region, still quite expensive. It's not cheap. It's about mid-range, and so this could go either way. So I'm just saying, be cautious. And if you look at this on the short-term chart, let me just finish off with this on the 15-minute chart. You can see we're trying to get, there's the weekend gap on the left. We haven't got to the top of it yet, and we're not making a lot of progress. It's trying half-heartedly over about 5 candle, 4-hour candles so far, without any real progress to the upside or to the downside for that matter. So yeah, I'm sorry I can't offer any more assistance than that, apart from just to say that I'm going to remain hedged until probably we break up above 375 and hold above there, or we break down further, and if we get down to $3, which is the next level down below us, I think, then there might be a chance. And I've even got my blob pre-drawn in there, as you can see. I drew that blob in there about a month ago at the start of this contract, actually. And I said, at the very least, at the very worst, the worst case scenario is that this contract completely fails and we have to actually retest the entire structural low rather than just these.
Does look like it's going there.
It does, doesn't it?
I mean, what's your we had the JOLTS numbers are actually going to come out in just a couple of minutes, but what's your take on the US? I know you've been busy this week. US ISM manufacturing PMI, which was just shy of expectations, a little bit lower, which is typically good for crypto, because with crypto, anything above 50 is usually a pretty bearish signal. But any small movements outside of expectations and obviously are bad, are pretty good for crypto. It's only any extreme kind of moves. So I'm pretty happy about the numbers. What's your take on that?
Yeah. I think any sort of gentle weakness is good overall in either jobs or manufacturing. And while you mention that, I'm looking at the copper chart here. You can see copper's struggling at these highs, and that's another indicator that, industry might not be quite as healthy as we think. And then, one of the reasons natural gas is selling off as well is not, let me rephrase. One of the reasons natural gas is selling off as well could be a decrease in industrial demand. I haven't looked at the numbers. I'm not saying that is the case, but, and I will look at the numbers later on today. But if there is a decrease in industrial demand for natural gas and copper, and we see the ISM numbers coming off a bit, yeah, sure, that could be encouraging for Bitcoin and the stock markets, believe it or not, as you say. And talking about that, NASDAQ's moved to a new daily high. So is the S&P to a new all-time high, and we're long across the board. I'll talk about these in a little bit if we get to that. But are there any questions on natural gas or oil? So let me just summarize as best as I can. Oil, I'm short. I'm remaining short. My target's $55, and then I think we can get to 50. If we can get to 50, I think we'll get to 48. And if we get to 48, I think we're going to have a violent reaction upwards. On natural gas, I'm fully hedged. I have no clue what's going to happen next, but I suspect it's possible that we may get down to $3. And until we get down to $3 or above, $3.50 at least, but probably $3.75, I'm probably going to remain hedged. And that could happen. Things can change in the next 4 hours or 8 hours, candle by candle. We'll watch it and observe how things go. But for now, as they say in the Zulu language, hamba gachle, which means go softly, tread gently. Don't get FOMO. Just play it gently. There's no need to rush into any of these energy trades. And of course, as you said, Paul, if there is a decrease in industrial demand, it could affect things like oil as well. So natural gas, oil, copper, and perhaps even silver can come off as industrial demand drops. We see silver's looking a bit weak today too. So yeah, all kinds of interesting factors. Will that drive Bitcoin up from these intraday lows? Quite possibly. I don't know. If we finish above this order block today, Paul, would you consider that to be more bullish? We'd end up with another hanging man candle there.
Let's have a look at these levels. Just say that one more time for us, please. Thanks.
So no, I'm just saying if we do see so these weaker industrial numbers that you were talking about, and the fact that silver and copper and natural gas and oil may be declining because of industrial numbers, that could put a bit of a bid into Bitcoin and some of the other more risky assets.
Well, the JOLTS numbers
if that did,
as 7.15 million, which is just shy, which is below expectations of 7.61 million. So we've got the numbers we want for that kind of scenario for Bitcoin. So that's 7.15 million, just a little bit shy of expectations. Look, I think the thing is with I want everyone to be very cautious about Bitcoin at the moment. and just we're obviously, we haven't managed to get above 94.5K. We haven't managed to get above resistance yet, which means we're still in the trading range we've been in since the back end of November, right? So that's the context, right? Now there's a good opportunity for a pullback and an entry here, so we could see that happen. So yeah, I think you're right. I think that's something we can probably see in the short term. I mean, it's just the beginning of January. I think there's plenty of room to keep going based off some of the data points which we're getting in. But of course, it's when everyone starts to tie these data points together and starts properly assessing what's happening in the stock market and everything else is going to be quite telling, which is why we said at the start, like, it's the second move which we want to see, not just from Bitcoin, but from we need to see where we are at the back end of January before we can make any assessments in that regard. But the numbers are certainly pointing for risk assets to have a little bit of brevity for sure. Quite.
Yeah. And actually, the reason I've drawn this squiggle in like this is because it could end up like we've got a flat top here that we just bounced off, down from, and a rising bottom. So it may be an ascending triangle. And I like ascending triangles because they have about a 65% chance of breaking out to the top.
Yeah, you're right. You're right. That might be in play at the moment. That's a good shout, actually. It's I mean, it's a long.
We'll keep an eye on that.
It's a triangle which probably peaks in February, but yeah, for sure.
Yes. So it's got some time to run still, right up into beginning of Feb. So it could be messing around for a bit still. But however, having said that, we've got other triangles here. For example, on the Nasdaq, this is more of a symmetrical triangle, and we've broken out of this one. And I'm long. I've got 3 positions on the Nasdaq. 1, 2, 3. I think they're all in profit now. And we've fractionally broken out of what looks like it's not the neatest triangle, and it's not perfectly symmetrical. And I tried to fit all the lines in, but I couldn't. So it's a bit of a hash job, really. But there you go, something like that. That's not even a triangle. But yeah, looking good. And I'm thinking that we could move up quite a lot higher. And remember, we've got the top 200 period Bollinger Band at the target of closer to, almost at 30,000, really. And I'm not the one that's saying we could get all the way up there. It's people like JP Morgan and Goldman Sachs who are putting out some ridiculous numbers at the moment. So, are they right? 28,500, 28.8? I don't know. But if we do break out of an ascending triangle, or even a symmetrical triangle, it would probably have a target equivalent to the height of the triangle base, which is this line here.
Do you trust a billionaire?
Yeah, maybe not. And then, of course, and then the S&P, we've reached new all-time highs. We took a new long on the S&P a few days ago. We've been long on all of these for quite some time now, almost a year, I think, that we've been long most of the time on stock markets. So, and I'm going to remain long in mind. My thinking is that, and this is contrary to what most people think, maybe not most people, at least half of the people on the news, on traditional media, and on X and YouTube and that sort of thing, at least half of them think that 2026 is going to be a catastrophic crash, and we're going to move into 1920s style depression. People really do think that. I don't think so. I think that's alarmist and frankly a little ridiculous. I think it's unlikely, and in fact, I think we're going to see a lot more liquidity coming into the markets. That's my opinion, but I don't know. I think it's a very divided market right now, and I think I'm going with the long side. I'm going to remain long across the board on stocks. So I've got a long on Nasdaq, S&P, German 30 now as well. We bought some 3 days ago on the German 30 at about 20. I think it was 24.8. And we've got some positions on some of the names as well, like Circle, MSTR, thankfully recovering, actually. And we talked about this. You said we might chat about this a little bit, Paul.
Let's chat about this.
MicroStrategy. Yeah.
So, right. I think, so how do we frame this for people? So what's your take then, James, on the implication of a tradable, actionable correlation between strategy and Bitcoin, as an example? What's your thoughts on that? Because I'm quite interested.
To be quite frank, I'm a little concerned about, and I don't think I'm educated enough to understand their model in entirety, and the implications for treasury type companies overall. But considering, and I'm also not sure whether MSTR is likely to lead Bitcoin like it has done, prior to now, or if it's likely to lag. And I think we saw it lead Bitcoin, selling off well ahead of Bitcoin in November last year, whereas Bitcoin actually carried on moving up, didn't it, for a while? Or am I incorrect? Let me have a look.
Check those dates.
I think Bitcoin stayed higher for longer. Maybe not, actually. I think Bitcoin peaked in October.
Yeah.
And MSTR actually peaked a little later, actually. Maybe that's true. Peaked in November, end of November. So, yeah, I don't know. Some people think it leads Bitcoin. Some people think it lags Bitcoin. I think it just goes with Bitcoin in general, but more volatile fashion. And technically, we've come back into really important support in the middle of this big breakout cluster. We did the breakout. We've pulled back as we should. And I think if we're going to be buying, this is the right place to be buying. And like everything, as you say, when you talk about altcoins, Paul, it's Bitcoin dependent, I think, ultimately. And if Bitcoin can maintain its posture or poise, then I think MSTR can too. I've got some long positions on here, and I do like the way this is trading. Notice that we're now, if we close well today, we will have closed above the 20-day moving average for the first time since October. Yeah.
Are you seeing a descending triangle there, like I am?
In this part here, probably, yeah. Yes. Yeah.
I think
maybe.
The thing is, right, so this is, I think I will say exactly what you said, that we just don't have enough data with these this reserve kind of move, which not just strategy, which many other companies, big, small, medium, tiny, are all doing with Bitcoin. But if you've got such such exposure to Bitcoin like strategy, then of course they're going to be looking at the price action, and it's going to be affecting what they're doing with it. And if they see Bitcoin losing key levels, then of course it's going to have an impact. Now, I think, but is that a tradable correlation? Is that an actionable correlation? And I'm just not sure it is. And I think it's very important. I mean, principally, I have an issue with, not an issue, but principally, I try and guide people away from a narrow focus of the market in any way, in any respect, whether it's an M2 correlation, which was in play a year ago, anything like that. I think it's important because it's only a correlation until it isn't. Right. And like with the M2 and the global money supply in that respect. And I think so it is very interesting, but I don't think strategy is going to be, obviously, if you hear strategy saying they've bought a gazillion Bitcoin, then that is going to potentially move the market, right? In certain contexts, right? Of course, right? Just like the Trump administration or legislation in Japan or anywhere around the world, which is being more pro crypto, that's going to be helpful. But that's not really a correlation. That's just a news, right? And I think so. I mean, and I'm interested to see what the rest of our group, your group, and the crypto gaggle are. Because they're pretty good at hunting down these things. So I think we might be proven wrong in the future. I just can't get my hand around it just yet, if that makes sense. Like you said.
Yeah. Actually, the first time I ever traded this name was at the top here in November 24. And those in the private group, you weren't around at that time, Paul. We had quite a large long position on Bitcoin, which we'd ridden out on that that last part of that move in that cycle, the bull move. And I actually shorted MSTR quite heavily at this time and almost matched our Bitcoin long positions and used it as a hedge. And I remember seeing a lot of flutter on X about people saying, I'm long Bitcoin, but I hedged it with a short MSTR. And everyone was going, are you mad? Are you mad to short MSTR? It's never going to go down. It's going to just keep on going up. But we did anyway, and we got a good trade on that. And I think we held it. I think we got like $150 move on it or something. It was massive, and we held the Bitcoin longs at the same time, and eventually dumped those. But yeah, so that was my first exposure. And then we sold again. You can see I've got two little blobs at the top there. I sold that double top. and we got out somewhere a little bit lower down. And then the moment we got down to the triple bottom, and if you remember that this was in November last year, so this is when Bitcoin started really collapsing down here. And I thought maybe we'll hold the triple bottom, but we didn't. We tried, big candle there, bounced out of there, but didn't. We moved down. We didn't even hold the purple line, which is the next level, which is that flat top breakout zone. So yeah, I don't know. I think I have sort of some concerns about MSTR as a business model. But technically, I like the way this is bouncing out of the support level, and I like the way it's retraced. And in fact, it's also a Fibonacci retracement level, which I can't remember.
Well, that's
I think it's the 786. Are you there, Paul? I think Paul might have. Paul, are you there, Paul? Or am I here? What's going on? Oh, Paul's gone. Oh, right, it's just me. Okay, folks, sorry about that. Yeah, so, and also MSTR dropped down to the 786 fib and then dropped down below there, which is also kind of bearish. So it's not on a log scale, but it should be. So yeah, I kind of think, that's right. Oh, there you are, you're back. I was just saying we dropped down through all the key supports, but at the moment it's looking like it might just hold. And so I don't know. I'm just playing this technically at the moment. If we don't hold this bottom here, obviously I'm going to have to hedge the whole lot. We've got quite a decent position on two tranches, both at more or less the same price. It was a double bottom. We failed that bottom, but bounced out, gapped out of there, and we're holding it so far. And we'll see how we go. But just glancing across at Bitcoin, it's not looking great, is it? And if this keeps moving down, MSTR will follow suit.
Yeah, I mean, in this context, of course, we want Bitcoin to move down to get a good entry. But going to what the point I was going to say before I rudely disappeared, your concerns, which you said about the conflicting narrative for potentially 2026, about when you talk about concerns with regard to strategy, and then you put all of that with concerns about the AI space and some of the tech leaders, NVIDIA and so forth, and some of the warning signs which are starting to appear, subtle ones, like like supply issues, memory prices, all that kind of stuff, right? There, it's difficult to fully rule out catastrophe at some point, because we are in very uncharted waters with new tech. I do think you're right. Hyperbole, everything which pushes clicks and sells ads and so forth. Of course, it's always going to be that, and the reality is going to be a lot more subtle, and a lot. But we do have to be very cautious. I think as traders, and it's never about this. I think the whole bull bear narrative, like, I'm going to go to sleep now because it's a bear year. Right? It's like, I think there is always so many trading opportunities regardless. It's not like Bitcoin goes straight up or straight down, right? There's always key levels. There's always trading opportunities, right? And I think that's what people need to understand. And as Bitcoin gets bigger, it is going to become less volatile, and it is going to be more easy to trade regardless of the direction. The bear market is probably going to be less steep. And like we're going to have a rally potentially now up to maybe about 101K, a little bit more. That's something we can trade and make money from, right? And we're going to have loads of those as we hit 69K. So it's like the direction really isn't a big deal at the moment. Like you said with Nat Gas, you've been trading the same range for donkey's years, right? And it's like you're not any the worse off when it's going up or down. It's just an opportunity. So I think the whole narrative, the whole fear thing, is a little bit silly. As I've already said in the crypto streams, like I enjoy bear markets in crypto because it's great to short. It's easy to sell to buy fear, But so it'd be interesting to see how 2026. And if we do have the apocalypse, then obviously we can eat our hats for sure. But
yeah. All right. So the apocalypse might come to gold first, though. And I'm short on gold. Just update for those who are not in our private group, and you should join our private group, by the way, if you'd like to follow our trades. But gold, I'm short on. Silver, I'm long on, which has been our play for, I don't know, probably 6 months so far, and it's worked out perfectly every time. And because the gold-silver ratio has been moving strongly in the favor of silver, and so gold has been declining against silver. And because gold has been moving up and I've been looking for shorts, I've hedged it with a sensible hedge of buying silver which is doing better than gold against the dollar. So we've been long on silver, short on gold. Now, let's have a look at where gold is. We've got a purple trend line that we've hugged and held. We broke down through it. I've got 3 short positions on. We regained the trend line just a few days ago, but only to the 78.6% Fibonacci at 4,493, and we got short there, just unsighted, really, just on speculation, on a technical trade basis. We got short there. It's moved back down to the trend line, and so we still have 2 positions out of the money, 1 in the money, and we're retesting the trend line. I think we're fractionally below yesterday's low already, and butting down onto that trend line. The 20-period moving average is still below us, and the swing low. The COT report, which I don't have time to go through now, positioning of traders indicates that we are probably going to get a fairly decent correction on gold. The way it's positioned is commercials and other parts of that report, the whales are starting. Looks like they're starting. It's not for sure. Looks like they're starting to reposition from very, very overbought conditions and overcommitted positions on the long side on the futures contracts. So I think they're starting to swing out of gold into other sectors, not abandoning the bull market per se, but taking some profit from gold and swinging it into other stuff. Hopefully a bit of Bitcoin and a bit of MSTR and a bit of Tesla and some of the other stuff that we like, that we're long on, and that we hope will move up. And so gold might move down, silver might even benefit, and some of the other metals and energy metals, for example, like uranium and lithium. But what we need on gold is for this to now do 2 things: break down through and hold down below the trend line and the 20-period moving average, and that swing low. That'll be the first step. The next thing I think we could do is to get down to this next swing low at 38.8 actually, 38.9, 38.8. And if we get that far, I think we'll probably have to get down to the trend line and the 200-period moving average. And it could be that we do eventually get back down to the central story here, and that's the big breakout ascending triangle that we traded within and eventually got long on the breakout when we did. So we've done really well on metals, and we just need to be very careful now that we don't try to sell into a massive exponential bull market. I don't think we've been doing that. I think you can see gold has been fairly placid and sensible, definitely not exponential, and definitely not all that bullish at the moment. And because we're short, I'll be looking to take profit at some point as we start moving down. But I'm not convinced. We might just bounce off this trend line. We've only come back down to a Fibonacci retracement level, the trend line. We're still above the short-term moving average. So because of that, I've retained a long position on silver, and I will do so until I believe that gold is definitely going to move down. So this is my hedge. It's not the same size as my gold position. I've reduced this size a little bit, maintaining the same size on gold. So I'm less short on silver, less long on silver than I was in terms of size. But you can see where I've been buying, one there, and one there. That was our last tranche. I will also stop this trade out at break even if we move down to that level and close around about that sort of level, forming a reversal candle pattern in the process and a double top potentially. If that does happen, I expect gold will have moved down quite dramatically, as gold is more likely to drop more rapidly than silver, given that it's just not doing as well.
Is that because it's heavier?
Yeah, it's because it's heavier. Yeah, exactly. Yeah, it's heavier. Yeah, heavier in your. Yeah, exactly. I think it's a lot heavier than silver, actually. Like 1.3 times heavier or something like that.
Yeah. So all these people in the Arab Emirates which make their Lamborghinis out of gold should have been silver. Sorry, mate.
Yeah, exactly. Yeah. And then at the same time, I have nothing on platinum or palladium. But that's also looking quite toppy, I have to say, platinum. And then copper is also looking a bit toppy. But I'm short on copper too. I've just taken a long position off copper. We got long, was a hedge, and I've taken profit on the long side, and I'm now leaving the short side to run. This position down here is hedged, so it's kind of neither here nor there. I've got some shorts and a long, more or less at the same price. So that's not really in the game. But this position here is the one that I want to build upon if we keep moving down. We don't want copper to do a big collapse like we saw over here in July last year. That would indicate we've got probably some problems in industry and in the financial markets to follow. So we don't want any of that. That was caused admittedly by tariffs. Wasn't it an industry thing, or it wasn't panic in the markets? It was a tariff sell-off. Yeah. But we just don't want that to happen again. We just want to, if it's going to come down, it should dribble down gently and in a gentlemanly fashion. We've also got a long-term trend line coming up from underneath copper, which probably needs to be broken. And the copper's not going to stay at $6 forever, I don't think. It's going to come back down. And I think we'll get down to the trend line eventually, into that zone, and probably down below there into the red trend line, the longer-term one, which comes up from much further back. So that's copper. Short on copper, short on gold, but I'm holding my silver longs, which people think is crazy. Why would you be short on gold but long on silver? Well, you can have a look at our result book and you can see why we've done this, because we've made profit on both of them on every occasion so far. Yeah. Believe it or not. Yeah. So that's metals, folks. And I don't really have much else to add. Yeah.
Can I just answer this quick? Yeah. Can I just answer this quick question? We guys, we said before the session, because obviously James has been out partying with his grandkids. So we're gonna have a short one. We never have a short one, so we'll try and wrap it up. But the question was, so are we in a bear market for crypto then? Well, if I just put this chart back on, if you don't mind, James. So if I had invested in Bitcoin, right, at the start of the bull run, yes, I would have sold it, if not most of it by now, because we've broken the 50 MA, right? That's the first signal. Now, so the altcoin market has certainly been in a bear market, right? And we're waiting to see if it will enter a bull market. But yes, so Bitcoin, in my opinion, has entered a bear market, but it's not quite as clear cut as that, because ultimately you can say to yourself, okay, so I'm going to consider it in a bear market once we get rejected from 101K and form potentially the right shoulder of this head and shoulders. Other people will say, well, once we break down from, we've had the neckline break, then that's confirmation of a bear market. So it's not quite a binary state, but we have significant bearish long-term TA signals, which are undeniable, which I would communicate to students and group members and so forth, would be your key signal to sell, right? Back in 2023 when this all kicked off, and that has happened, right? So I would say, yes, Bitcoin is potentially in a bear market already, right? We just need additional confirmation. The altcoins have been terrible the last quarter, right? And only a select few like Zcash, BNB, and so forth are making gains, right? And that's the most important thing to recognize. Now, whether we have a Bitcoin bear market and an altcoin rally, well, that's 2026. Maybe we're going to see something different. But in terms of what I'm seeing, yeah, absolutely in a bear market. Based on what we're seeing, that can change, and then we'll change our opinion. But it's not. That's because it's not about a prediction, isn't it? It's about TA. And if me and James see Bitcoin break above 101K and then break all-time highs, then of course, no, we're no longer in a bear market, and we'll change our position. But as traders, we need confirmation, and we've had confirmation that things are bearish. You just look at the chart; it's really straightforward. Can we have a recovery?
Yeah.
Yes, we can. Right, so it's complicated, but it's there's nothing horrible to be like, oh, we're in a bear. It's okay. You can still trade. It's still fine. Everything's okay.
Yeah, I want to caveat that, Paul. If you, which you knew I would, of course. So if we can, let's chuck my weekly Heiken Ashi chart up there, if we can. There we go. So I would contest that perhaps we're not in a bear market. Perhaps we're at the end of a bearish correction in a bull market, having made, so far anyway, a higher low than the previous one, holding the 100-period moving average. And for the first time in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 13 weeks, we've got a bullish Heiken Ashi candle. And the pattern that we have here is not dissimilar to every other pattern that occurs on these bull market pullbacks. Okay, forget the stuff on the left, talking from the bottom here. Forget all that. But
You
there's a
mean
couple of things I want to put. Forget the bear market. But I'm talking about okay. I'm saying maybe we're in a bull market, and these are just bull market pullbacks, and we are making higher highs and higher lows. But maybe not. I don't know. It's just a thought. But here's another interesting thought.
You might have a different criteria. You may say, well, I'm not going to sell my Bitcoin, or I'm not going to get rid of my total exposure until I see a couple more bearish signals, and that's fine. No one's saying anything different. People are commenting. Sure. It's just, you will have your strategy. I'll have mine. 6GSF is going to have his. So, and that's fine. So, it's not a binary proposition. And James, with your experience as well, I think it's very important to listen to these things, these narratives. But the only reason why I'm so grumpy is because I don't want people entering positions thinking they're entering it to go to the moon and putting their life savings in, when really probabilities aren't in their favor until we see something different. Whereas back in October 2023, it's a different proposition, right? So that's kind of where I come from.
No, absolutely. And then the last thing I want to say on this chart is that level you just spoke about, 101-ish thousand, is actually the confluence on this Heikin Ashi chart, on the weekly chart. This is a weekly, not a daily chart, of the 50 and the 20 period weekly moving the 50 and the 20 period moving averages on the weekly chart, simple moving averages. And that's right at 101. And it's right at that previous swing high. Well, it's the area that we know is important. Also, these Heikin Ashi candles, once you get one green one, you normally get a couple of others at least before it goes red again, unless we're in a bear market. Even in a bear market, you don't get one Heikin Ashi weekly candle on its own, not once. Interestingly, that means this candle may not be the only green candle, but it might be one of only two. I'll give you that.
I mean, that's why I use those candles predominantly. For
they're really good. And sorry, Paul. And the third thing I want to say, and this ties in again with what you were saying, Paul, is if you are trading Bitcoin, most people seem to get wiped out on Bitcoin when the bear markets begin, and they just don't get out of the trade. They don't get out of their long positions and allow it to get wiped out. A very good way of determining the top, or at least a potential top, is just when the weekly Heikin Ashi candle turns red. That's it. Simple as that. If it turns red, don't be long. Yeah. It's pretty simple, and it'll keep you out of a lot of pain. Yeah.
I mean, I think this is the problem which we both face. And I certainly face in the crypto space, because it's just everything's hyperbole, always, always, right? And when we're doing thumbnails for our videos, and we're doing, we have to. I try and make sure that it's true. And if it's hyperbole and it's sexy, then great, we get the clicks, right? But ultimately, the space is full of this, right? I believe Bitcoin is going to go up from here, and then you have gaggles of people following it like lemmings. And I'm like, it's just so trading is about successful, repeatable, consistent trading with repeatable profits and so forth is about confirmation, not wishes, hopes, and rainbows, because rainbows will disappear just as quickly as you spot them, right? And that's the whole idea.
Anyway, Paul, I've got to rush off. I've got a couple more family things to do tonight, but I'm just going to wrap up. Perhaps you want to carry on with some of the altcoins. I'm not sure, but let me just
I've got
finish.
For that. That's fine.
Okay, all right. So just in summary, everyone, I am long across the board now on NASDAQ, S&P, German 30, and all the names that you see on this page. No changes to those so far. I've got a couple of Forex trades on. One is short dollar yen. I think we spoke about this last week as well. We weren't here last week, the week before. I wasn't here. Paul was here. I'm still short, selling that double top, hoping for this to move down. I noticed on today that the Japanese 10-year yield, 10-year yield in Japan, has risen to 3.75%, the highest it's ever been, and yet the yen stays either deliberately or obstinately weak. I don't know which, whether it's on purpose or if it's just being a yen. But it should be coming down. This chart should be moving down, but it's not. But maybe it will soon. And then I'm also long on the Aussie dollar, and I think we can get into 0.7 something on the Aussie after breaking out of another a falling wedge with a big spike low down through the bottom. we've broken out through the top now. And, you know, if the Aussie does get a little bit of a wiggle, and it'll probably end up at about 0.72 or 0.74. So that could be a good one, a few hundred pips out of that trade. And then, yeah, so, and then Bitcoin, I'll update in the private group, but I've got a small hedge on Bitcoin so far. I will hedge the rest of it. I'll put the levels up in the private group. And then gold and silver, no changes so far. I'm remaining short on gold, long on silver. That might change throughout today, but certainly will change this week as we get the jobs numbers and other economic data, which will affect all the markets. And then natural gas. I just saw a comment across there on one of the other things I'm following that people trying to get long here. Just be careful, folks. This is a hesitation doji. It's not a bullish doji. Yes, we held the 20 period here on the 4 hour. That's something, I suppose, but we're well below all of the levels. I spoke about this, all of this stuff at the beginning of the stream. And we've got two levels, very, very important levels, and we're below both of them. And we haven't made progress above this current level. And also, we still have not filled this weekend gap. So that's a slightly bullish implication. Or that roll gap, or that weekend gap, all the way up here at about $5.50. So we should fill those gaps at some point, but we may have to stay at the bottom here for some time. I want to just draw one more fractal. I think I may have eliminated it already. Hang on 1 second. No, I've deleted it. I drew a fractal from, let me quickly show you, from 2022. No, I can't see it now. Oh, yes, it was this fractal here, moving down. We tried to bounce the bottom. We stayed at the bottom for ages and ages and ages. This looks very similar to what we've got going on over here, and I wouldn't be surprised if we moved sideways for about a month. Actually, on natural gas, it might get quite boring. We might just be stuck above 375. Below 375 for the next contract till the end of this contract, about 3 weeks' time. And then oil, I'm still short, and that's it. VIX ticking sideways, not very exciting. Oil, we've talked about oil and all that sort of thing. And then just looking at if there's anything on this page, 10-year yield. Oh, one more thing, folks. I forgot to talk about this. And I'll go across to softs and grains very quickly as well. TLT, I'm still long. We added a new tranche this morning, yesterday morning rather, right at the bottom on TLT, 10-year treasuries. And then hopefully that'll move up with the 10-year yield moving down with a bit of luck. And then folks were asking about coffee and cocoa coffee and cocoa this morning. And I'm still looking for coffee to get slightly higher in order to sell into the next rally to get a big move down. At some point, we've got to get down below the swing low back into the more sensible price ranges where coffee has been trading forever and a day. We can't stay at these high prices for too long. It's a commodity, remember, it's not a trending market. It's not the S&P, it's not Bitcoin. It's got to come back down. Just when is the question. At the moment, we're ticking up. And at some point, any time along this path upwards, if it starts to turn down prematurely, I'll get short on coffee and possibly short on cocoa at the same time, aiming for down to about 280 on coffee, and then probably down into the low 200s on coffee, and then probably cocoa will follow suit. This one's been moving sideways, kind of boring, not much to say about that. And that's it. Also, fresh longs on wheat, soya, and cotton yesterday, or it could have been this morning, I can't remember. Sometime in the last 24 hours, we got long on soya, cotton, and wheat. Can't remember when. And that's all I've got to say. Oh, we're also long on lithium and on uranium, and that has not changed either. Long position on lithium from down there at about 59. We're trading close to 70 now. Excellent trade there. And then the other one I just mentioned was uranium. And I'm only currently trading the URA ETF here. And that's moving up nicely. And today, just holding that little rally that we had yesterday as well. So pretty good on uranium. Got two tranches, both just at the bottom of this yellow block or so. That's it, folks.
Right.
Paul, is there anything else you want to talk about?
Just one little thing.
Or any questions that we need to address?
One little thing about members. So firstly, thank you to anyone who is a member on any of our tiers. We're very grateful for your support, and we're doing our best to make sure that we give you all the content you deserve based on what tier you're on. So we were talking previously about the fan tier, which is the slightly more premium tier, which gives you access to, James, some of your off-public, off-book videos throughout the week. The same with Crypto Pulse with me and so forth. Now, we've lowered the price very slightly, but we didn't want to kick people off after they just maybe renewed for their month. So basically, you'll see now on YouTube that there is 2 fan tiers. There is a new and an old. And what we'd encourage you to do if you are currently on the fan tier, which is a good few of you, is when your subscription's up, just swap over to the cheaper tier, which is the new fan tier. Only subtly cheaper, right? Just because we did that, we didn't want to cut anybody off. So if you can just gravitate to that once you renew and just get everybody over, then eventually we'll get rid of the old tier, because we just wanted to make sure all the prices were appropriate and aligned. So a little bit of a discount. So when you do need to review, just move from the old fan tier to the new one, then eventually we'll get rid of it. So I hope that's convenient for everybody. But we appreciate your support going forward. But that's it for me. Just a bit of housekeeping.
Yeah, awesome. All right, and as we say goodbye, natural gas ticking down, folks. Be careful. For those in the private group, we will be looking at the next 4-hour candle on natural gas to see what happens. But at the moment, it looks like we're not going to be doing much. This is the 15-minute chart, as you can see, starting to tick down. So stay tuned in the private group for more updates on that. All right, folks.
You'll be traveling tomorrow, right? Is that right? You're traveling tomorrow?
I'll be traveling tomorrow and Friday, but I'll be back in my office on Monday. And I will be doing my live stream on Sunday from my office. I think I'll be back home on Sunday, back in my office. So live stream on Sunday, and I'll do a video tomorrow for members. I think on Friday, actually on Friday, hey, Paul. I can't remember if it's tomorrow or Friday, but I'll do the next video.
Public tech video potentially tomorrow, with maybe a members one on Friday, depending on where you are. And we'll have a crypto live stream tomorrow where we can get into altcoins. And of course, as you said, James, we'll be back for your famous Sunday show as well. So that's it. Cool.
Actually, I will do an update on natural gas tomorrow. I think that'll be a very good idea, because the last update was on Monday. So I'll do a video on natural gas and probably oil as well. But folks, have a great day and a great evening trading. And I'll be back, as I said, in the office on Monday, and we'll be back to normal programming from next week. And of course, everyone will be back at the office. All of the big players, everyone's back from the Hamptons and Long Island and the skis of Switzerland and Austria, the ski slopes. They will be back at work, and we'll see volume picking up and the market's deciding what to do. And we'll be along for the ride, I guess, hopefully.
Yeah.
So, okay, Paul. It's great to speak to you and everyone else, and I'm out of here.
All right, take care for now, folks. Bye.
All right, ciao.